All right, let's talk about the electric vehicle maker NIO, because it's been making some serious waves in the market, and it all starts with one pretty incredible number.
Yeah, a 14% jump. That is the kind of move that makes everyone sit up and pay attention. And get this, that happened in just a single trading session. We're talking about an explosive move that capped off a 7-day winning streak. Wow.
So that brings us to the big question, right? Is NIO stock really on fire? I mean, is this a sustainable rally or is it just a flash in the pan? That is exactly what we're going to dig into today.
Okay, so to really understand what's happening with this breakout, we've got to look at the charts. But we're not trying to predict the future here.
Instead, let's put on our detective hats. You know, a good technical analyst doesn't use a crystal ball. They look for clues in the data to build a case. So let's start examining the evidence, shall we?
First things first, let's check the strength of the trend. I mean, is this rally built on a solid foundation, or is it just smoke and mirrors?
All right, our first tool in the toolkit is the moving average. Think of it this way. It helps smooth out all that crazy day-to-day noise by just averaging the price over a certain period, say 50 or 200 days. It really helps you see the real trend underneath all the chaos.
And when we look at NIO, the signal is pretty darn clear. The stock price has smashed above both its 50-day and 200-day moving averages. Now, this is what traders call a classic breakout, and it's a huge clue that we might be seeing a big shift from a downward bearish trend to an upward bullish one.
So what should you be watching for? Well, if you're bullish, you really want to see the price hold above these lines. If it can do that, those old ceilings can actually turn into a brand new floor of support. But, and this is a big but, if the price slips back below that 50-day average, that could be a huge warning sign that this whole breakout was just a false alarm.
Okay, so the trend looks like it's shifting, but is there any real power behind this move? You know, any momentum? Let's check our next clue.
Whoa, just look at the conviction here. On an average day, NIO trades about 57 million shares. But during this recent surge, it absolutely exploded to 140 million. That is a massive increase, and it tells us one thing loud and clear. A ton of buyers are jumping in, and they mean business.
Now, to really measure that momentum, we use another tool called the MACD. I know, it sounds super complex, moving average, convergence, divergence, but all it really does is look at two moving averages to see if a trend is picking up speed or starting to run out of gas.
And for NIO, the MACD is basically giving a big thumbs up. It's positive, it's above its signal line. This clue backs up what the volume was telling us. The upward momentum isn't just there, it's strong. And for now, it's actually accelerating.
So what's the next thing to watch? Simple. If that MACD line keeps climbing higher, that's a great sign that momentum is still growing. But if you see it start to flatten out or curl back down, or even worse, cross into negative territory, that's a huge red flag that this party might be coming to an end.
Okay, so far the case looks pretty bullish, right? The evidence is stacking up. But a good detective always looks for the counter-argument. What if this rally is just too much, too soon? Could it be overheating?
To check that, we turn to the Relative Strength Index, or RSI. The best way to think about this is like a speedometer for the stock. It tells us if the price is moving too fast and is in danger of, getting a speeding ticket. A reading over 70 is considered overbought, and under 30 is oversold.
And here's the plot twist in our little investigation. NIO's RSI is currently sitting right around 78. That is firmly in that overbought zone. Now, hold on. This does not automatically mean you should sell. What it does is confirm that the buying pressure is insane right now. But it's also a yellow flag it's waving at us saying, hey, this rally might be getting a little overextended and could be due for a breather.
So the key is what happens next with the RSI. If the stock takes a little dip and the RSI comes back under 70 but stays strong like above 50, that could just be a healthy cool down. No big deal. The real danger signal is something called divergence. That's when the stock price makes a new high, but the RSI speedometer actually makes a lower high. That's a classic sign that, behind the scenes, the momentum is quietly fading away.
All right, so we've checked the trend, we've measured the momentum, and we've spotted a potential warning sign. Now let's pull all this evidence together and see what our detective's toolkit looks like.
And this is maybe the most important rule of all. No single clue ever tells the whole story. It's just not that simple. As we just saw, one indicator can be screaming, "Go," while another is whispering, "Be careful."
A smart detective, a smart analyst, knows you have to combine all the evidence to get the full picture. So here's the multi-indicator strategy we just walked through. Step 1, check the trend. Are we above the moving averages? For NIO, that's a yes. Step 2, confirm with volume. Is there conviction? Absolutely. Step 3, assess the momentum. Does the MACD agree? Yes, it does. And finally, step 4, look for warnings. Is the RSI flashing yellow? And in this case, yeah, it is. That's our 1 point of caution.
So after putting all our clues together, here are the key levels to keep an eye on. Think of $5.50 as the new floor, or support. The next big ceiling, or resistance, looks to be around $6.73. And of course, that warning zone on the RSI is anything above 70. These numbers basically give us a roadmap for what to watch next.
And look, I have to say this, and it's super important. None of this is financial advice, okay? Technical analysis is an incredible tool for sizing up probabilities and managing your risk, but it is not a crystal ball. It will never, ever predict the future with 100% certainty.
Which really brings us to the big final thought here. Everything we've looked at today, it's really just a roadmap of market psychology. It's the fear, the greed, the excitement of thousands of investors all playing out on a chart. And that tells you a whole lot about how the market feels about NIO right now. But here's the million-dollar question. Does that map of market feeling, does it actually line up with where the company itself, with its cars and its technology, is actually going in the real world? And that, well, that's a question every investor has to answer for themselves.